hopefully my issues from this morning are solved. But at least we made money for those of you who were there. But it was very, very troubling. But anyways, markets were not that active anyways. They just basically went straight up. Not a total shock based on the lack of volume. You know, if you remember that dull markets tend to drift higher, then you would assume that if they're going to be quiet, they're going to drift higher. And just look at the volume. Okay, look at the volume. The last 4 days we've been higher. There's none. It's virtually non-existent, and it doesn't matter what you look at. They're all quiet. Some more than others, but I mean, you can look just about anywhere, and you're not seeing much action. So there's not a lot of price action in the market right now. Again, for hedging, it really doesn't matter because you're holding anyways. And you all witnessed, if you're hedged, you all witnessed last week what a spike in volatility does. And then when it comes back in, what it does on the other side. But of course, we get the edge of the first nice pop to the upside. But overall, you know, there's a lot of news this week. I don't know what sparked today's rally. I mean, I know they're going to say it was PPI, was weaker than expected. But I think it was just a lack of overall participation in the market. And really nobody gives a crap right now. Okay. And I think that would be more the answer. Again, as I said, dull markets will drift higher. And I think this was not like an explosive rally, although it was up big. I wouldn't call it explosive. It just kind of stair-stepped up almost the entire day. Okay, if you just go look at a short-term chart, look at that. That's not an explosion. That's just walking its way up. Lack of sellers, lack of participation. And again, that's just part of the business. And this is when you got to be able to make a decision if you're trying to day trade or trying to trade, to say, hey, maybe this is not the market that I want to be involved in. And of course, I traded very little today. In fact, I'll tell you, I traded 77 futures contracts today. And if you listen to my update, okay, that was the same amount I had this morning when I did the update. So, you know, what are you gonna do about it? You're not gonna do anything about it. You're gonna sit on the sidelines and you're gonna wait until the market gives you real opportunities to trade. You know, remember, you can make a lot of money in the market, but if you're pissing it away trying to trade in conditions like this, then how are you going to make money? Because you're going to blow your brains out trying to trade this lousy market. Does that make sense? Yes, it does a lot. And again, these are the lessons that we all have to learn about the world of trading. Okay, again, it has nothing to do with why you're in class, because we don't worry about any of this stuff when we're in class, because we're just playing. But when you're trying to trade, and I know many of you are trying to trade because many of you are there with me in the morning every morning. Okay, so again, you have to recognize that being active does not make you money. You know, being active in a good market will make you money. Trying to be active in a crappy market will more often than not cost you money. Okay. Anybody try to trade today? Did anybody trade today? Just out of curiosity. Again, I'm not going to pick on you. I'm just curious. And if you did, how'd you do? And again, if you made money, great. If you didn't make money, understandable. But I'm just curious how you did. A couple of small futures went good. Okay. And again, it's good to have some small winners, but now when you think of the small winners, you think about how much risk did you take to make those small winners. Remember, you want the risk that you're taking to commensurate with the reward you're trying to get. Now, you know, unless you just bought them today, it was very hard to make any real money unless you just bought them. And listen, there are people that do that. Okay. And I don't have a problem with that. I mean, I didn't buy them because I didn't sell them. I didn't buy them either. Okay. Because I didn't see any real opportunity. And if I didn't have to be here now, I'd be on the golf course right now. Okay. But I got my obligations. I got to teach. So here I am. But normally, if I had nothing to do this afternoon, I'd have been gone 5 hours ago. I might already be at the casino playing poker. Okay. But you can see that it's not, when there is not swings intraday in the market. Okay. And there really was not. Okay. When there's not swings, okay, it's harder to trade. Now, could you have caught this to this? Yeah, maybe. I mean, again, I'm not saying you couldn't have. All right. But again, if I'm depending on trying to catch an absolute top and an absolute bottom to make money, then is it a good idea to participate in that kind of market? What do you think? No, not really. Again, I know how much people want to trade. I've done it. Listen, I've done this for 45 years. Okay. I know, and I've made every mistake, okay, that you can imagine. Okay. I can teach you how to lose 5,000, $1,000 range. Anything you want to learn it, just let me know. I'll teach it to you. Okay. But I'm telling you that learning that not trading is the same as making a trade. It's a decision that you make to walk away because based on the current conditions, we're missing price action, we're missing market participation, we're missing real direction. Yeah, we've been up the last couple of days, the last 4 days, but you had 1,000-point down day a week ago. Okay, so again, you're really not getting much. And if you look at the bigger picture, okay, what do you got? You got nothing. Okay, you have finally retraced to the mean. Okay, so now this would be a spot that if you were looking to sell, you might want to sell it. And I'm not making any recommendations about selling it. Okay, but I'm saying that is something that you might look at because that would be exactly what we're looking at, right? We look, if we're using the Bollinger Bands as a guide to when markets are oversold or overbought, then we are assuming and buying at the bottom or selling at the top based on our assumption that they're going to have some mean reversion. Okay, so now we have seen the mean reversion. Okay, the S&P has rallied from the oversold conditions almost 300 points. Okay, now you're never going to buy the absolute bottom, but let's just say you bought in at 5,200, 53, 5,250. It doesn't matter. Again, the numbers are immaterial. Okay, well, now you've reached your objective. So how do you handle the trade from here? If you did buy in and you held it all this time, which again, it's not a bad trade, and there's nothing wrong if you did it that way. How do you exit that trade now? What's your exit mechanics from here? Okay, because now you know that you have accomplished everything you wanted. Okay, you thought it was oversold. You bought from the oversold conditions. You wrote it up to the mean. Okay, so now what? How do you get out? What's the best way to get out? Let me ask it that way. What's the best way to exit this trade now? Do you just sell it at the mean? Is that a way? Scale out? Okay, that's a reasonable answer. I could live with that. Okay. Now, again, if you're and I prefer if you're day trading or trying to trade like that, you trade multiples. And if the multiple minis are too big, then trade multiple micros so that you have the opportunity to take some off. Very good, right? And then what you really want to find out is not where you're going to get out on the way up. You want to know how you're going to protect yourself on the way back down. Okay. Because basically, me personally, I get stopped out of every trade. Okay. The question isn't, is it a gain or a loss? The question is, where do I get stopped out at? Okay. Because I don't want to try to say that it can't go past the mean. Certainly it's possible. Here, look at Meta. Okay. This is a good example of what I'm trying to explain. Look at Meta. Went from oversold to overbought in 5 days. Okay. Think about that. So if you'd have bought it here, okay, and sold at the mean, yeah, you made money, but look at how much you left on the table. So what you want to learn to do, okay, if you're trading multiples or even if you're trading a single, okay, I don't want to sell it here. What I want to do is I want to go to a shorter term chart. And again, the shorter term chart is up to you. Okay. But let's say you're trading up a daily, so maybe use a 15-minute chart. I want to start finding levels. Okay. So let's say this was level number 1, okay, that I found as support. Okay. So now let's say this is now level number 2 as support. So my stop might be just below this support level right now. I could actually maybe classify another level. I might have my stop right here. Again, this is all feel, okay, and watching the chart, okay. But what you want to make sure that you don't do is you don't want out early, okay. You'd rather be out a little bit late, because when the one time you nail it perfectly, it ruins the rest of your trading, because then you think you can do it all the time, okay. And that's what I don't want you to do. I want you to learn to work with a method of how to exit. Okay. And I never want to pick the area that I'm getting out of. I want the market to stop me out. Okay. You look at crude today, for example. Okay. Crude spiked up, and that was through yesterday. Overnight, consolidated. Okay. And then all of a sudden, good night, Irene. Okay. And down it came. Okay. Well, again, you have to find areas of where you want to get stopped out on the way back up. Now, you know that it came from overbought in here to oversold here, and it stayed oversold. So there's no reason for me to get out. I just want to find levels on the way back to take some off. Does that make sense? Now, in our day trading class, okay, we day trade every morning together, okay, we use about like on crude, we use like 10 ticks to get out of one. We use 20 to get out of a second. And then we play with the remaining 2 if you're trading 4 micros. Okay. Because there I have a much better shot of capturing the big hit. Okay. And yeah, we'll get stopped out. We got stopped out this morning for a small profit. I think it was $14 or $15 on 4 micros. But again, we would have made more, but I had technical problems this morning and my screen kept blacking out. Okay. But at the end, we can set that and you can let them ride. And then you find areas. Okay. And you start to work. And the closer you get to maybe, if you bought, the closer you get to an overbought condition, then you would tighten up your stop, knowing that there's a high probability of it will fall back. And then if you escape that, then you'll let it work. Again, your stops can go, let's say you're using an average of a 50 tick stop on the micro. Okay. Just again, it's a number, but let's say you're using 50. But once you're in the money, the more money you make, the more variance you can have in your stops. You can have your stop at 10 ticks if it warrants because it's very overbought. Okay. And then if you got a big lead and suddenly it escapes and you got plenty of room, your stop can go back to 50, still making sure that you've locked in a nice profit. Does that make sense? See, there's no absolute to do it this way. Okay. The only absolute in this business is that you got to protect your capital. Okay. That's the only absolute in this business. You cannot afford to put yourself at risk. Okay. And I call these markets extremely risky. To me, it's not worth getting involved on a short-term basis because I don't see the potential to catch those big profits. Okay. That's what I look at. And that's what I'm thinking when I look at something. I don't see the overall potential to hit the big one. So why do I want to try to grind out? You know, when you're a retail trader, as we are, all of us, okay, you need to make bigger hits when you can. Okay. You are not and should not be a scalper when it comes to day trade. Okay. Because you can't overcome the cost to trade and all the other things if you're trying to scalp out 2 and 3 ticks on a trade. Okay. Does that make sense? I mean, if you figure, okay, let's say you're not even paying any commission at all. Okay, let's say you don't pay any commission at all, but you all do. But let's say you can pay zero. You still got exchange fees. So you got exchange fees on, let's say the S&P, let's say they're $1. Okay, so if you're making $20 and you're paying $2 commission in and out, that's just the exchange fees. But like I said, we're going to assume that you're getting no commission. But if you're so now you're giving up 10%, okay, of your profit just to pay the fees. You can't work on that tight of a margin, because what about when it happens when you lose the $20 or $30? Okay, now you've had the exchange fees plus the loss, and all of a sudden you've made two trades. Okay, you've got $4 in fees and you're down $10, and now you're down $14. Okay, doesn't work that way. Again, you have to be able. The only people that can legitimately scalp are floor traders that have a built-in edge to begin with. Okay, and again, I think you're always going to be better off when markets are this slow and this dull to pass. Okay, now it doesn't mean you won't find an opportunity, but now if I sit there and stare long enough at a machine, then there's probably a pretty high probability that I'm going to see a mirage and find a trade that really doesn't exist. But because I'm staring at it, I'm going to find something to do. What do you think? Anybody ever do that before? Okay. So again, is it worth it? You know, we all only have so much time in this earth. Okay. And there's no sense wasting it in a market that your probability of making money is extremely low when the markets are like they are. Okay. Unless you're position trading and you're willing to hold on for a longer period of time. Okay. Like we're in the futures portfolios, we're in the equity portfolios. Those positions, we don't even play with those during the day. Okay. Those either roll up in the equity side or in the future side. They change overnight if they change, and we don't do anything with them until it's time. Okay. But when you're trying to trade more actively, which most of you are, this is a very hard market the way it's been the last few days to make any real money. Last Monday was a great trading day. Okay. Yes, since then there hasn't been as many, but certainly Friday and Monday and today were not very good. They're very hard. And again, not that they weren't very good, but they're just very hard. So if you're going to have to struggle to grind out small profits, okay, you know, and the day traders with me in the morning, I'll tell you that. That's how I teach them. Okay, I go, look, there's not much to do. We're going to get out of here. We're going to take our little bit of money and go, because why should we look for trouble when we don't need it? Okay, there'll be plenty of time. You know, there will be a time when you'll be busy for days, weeks, or months at a time. But really, right now, we've been very slow. It is the summer. Okay, and there's really not a reason to try to be overly active in here. Certainly, you know, today, for example, I did sell some call spreads in Meta, okay, because again, it's very overbought. I assume that it'll have a little bit of a pullback, and if I'm wrong, well, okay, I'll lose money. But again, it's nothing that I have to deal with, and I knew I equivalently bought a put, but the way I built the trade, I basically bought a put for $3 that if I went and bought the same put on the board as just a put only, it would have been $6. Okay. So I knew I would take a $3 risk, and I was willing to do so. Okay. I sold some call spreads in Starbucks today. If you saw what happened with Starbucks, okay, I'm willing to take that chance. Okay. That's a blow off. That's an overdone market. Okay. And if I'm wrong, okay, but I have minimal risk. Okay. And I don't have to worry about it until Friday or the next Friday, depending on where I put them on it. Okay. Those are the kind of trades you can make now. But when you're dealing in the futures market, things are much faster. Okay. Even when they're slow, they're faster. and you have to make decisions. And I think when you put yourself in a position to make decisions, more often than not, we make bad decisions under the crush of the market, especially when they're going against us. Would that be an accurate assessment? A lot of yeses there. So again, I look, at the end of the day, you have to use your discipline and your ability to say, this market's too hard right now. If I can find a couple of trades that I'm willing to carry for a couple of days that have limited risk, great. Maybe I'll put those on. But other than that, your time is too valuable to sit and stare at a machine all day on the hope and a prayer that you will make money and get lucky, because this is not a get lucky business. Okay, this is a business of skill. It's like playing a game. Okay, and the skilled player will win over time. Not every time, but will win over time. And if you're playing around in here and you're pissing away little bits and pieces, they add up to a lot of money eventually. And they also change the dynamics of how you act and how you trade and what you're willing to do. And then you start making worse decisions. And I think if you just learn that sometimes it's okay just to walk away. It's okay to turn off the machine. Okay, because you can kind of tell pretty early in the day that there ain't much going on. Now, maybe once in a while you'll miss a busy day. So what? There's tomorrow. Okay. Remember, your number one objective is to be able to come back tomorrow. Okay. That's your number one objective, to be able to show up and do it again. And you know what? If you look at it tomorrow and it ain't no good, then you can walk away then too. Again, there is no criminal offense from walking away. Okay. Sometimes you're better off, because then you won't make those bad decisions. You won't put yourself in a bad state mentally, which happens to many. Okay. Those are things that we have to worry about all the time. Okay. Is what is our mental, okay, when we're trading? Because when you're trading with confidence and you can see it, you start to see the moves as they're happening, versus when you're trading from fear or from a scared side of the market, you make a lot of mistakes. You do a lot of chasing, and you end up chasing the dog chasing his tail around the corner. And that's how you learn how to lose $5,000 and $1,000 range. So again, I think it's important you learn that you can find, if there are trades, you can find things to put on with limited amounts of risk that can carry you through. And then you can also just walk away when things are not doing what you expect them to do, and when there's a lack of activity. Any questions about that stuff before I flip over? Oh, no, thanks. No, thanks for the good stuff. Well, I try. You're with me every morning if you're on time. And I always try to give you the straight scoop, right? All right, let me stop this recording and we will get on to the actual class and the questions and whatever.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.